Okay, everybody, we're back. I hope. Sorry for the problems. Let me write this. We're back once again. Yeah, sorry about that. Hope you can all see and hear. Anyway, I was in the middle of, close to the end actually, of that segment about dollar yen. Let's begin it from the start so we can also have it all complete in one place, and you can see that also as a recorded clip. So yeah, playbook. yeah. Oh, okay, well, notes taken, Luca. Anyway, this is a special segment about dollar yen. Take 2. So dollar yen ignores too many Japanese indicators. Contrary to other countries, the yen does not react to Japanese unemployment, does not react to Japanese retail sales, does not react to too many figures. Also, inflation and GDP and the Tenkan survey do have an impact, but not as strong as other currencies, okay? So that's one thing, the first characteristic of dollar yen, that it ignores Japanese indicators. However, point number 2 is that it has the best reaction to US figures. With US figures, we have sometimes the most straightforward reaction. A strong US dollar is seen against the yen in case of good figures from the United States. And in case we have a weak figure from the United States, the best reaction, the weaker dollar, will be seen in dollar yen. Okay, so the Japanese yen ignores, dollar yen ignores figures from Japan, contrary to many other currencies that react quite nicely, but always, or not always, usually provides the best reaction to figures from the United States, the most straightforward reaction, less noise, okay? Point number 3, a big influencer of dollar yen is stocks. When the Nikkei stock index goes up, the dollar yen goes up. In most cases, not all the time, but in many cases. Same thing with US stocks, stronger US stocks and dollar yen goes up, weaker US stocks, weaker Nikkei, and we have falls in this pair. So a very good correlation with stocks. In the past, there was a good correlation also with bonds, but I would say stocks have a great impact. Point number 4, dollar yen, or the yen in general, it's not only against the dollar, prone to intervention by the Bank of Japan. This intervention is frowned upon from the United States and from other currencies, from other areas. Bank of Japan intervenes either by talking down the Japanese yen, or the Ministry of Finance instructs the Bank of Japan to act to weaken the Japanese yen to support exports and push inflation higher. This is, I mean, all central banks have some kind of intervention, some kind of influence, some kind of desire, but the Bank of Japan does it directly, and it's the biggest major central bank that does it, okay? And point number 5, that's a classic, it's a safe haven currency. So the Japanese yen, and in times of trouble, money is repatriated to Japan. Why does this happen? Well, the origin is that originally we had very low interest rates in Japan. It's still the case. And the yen was traditionally a funding currency. You lend in yen and buy other assets, riskier assets elsewhere. And then when in times of trouble, this money is repatriated, even if this trouble is in Japan, as we've seen in 2011, okay, with the Fukushima catastrophe. So in many cases, dollar yen falls when things get worse in the United States, in Japan, in China, terror attacks, you name it, okay? And it strengthens when there's a risk on atmosphere, okay? So this is also a characteristic of the pair. So to sum it up, the yen ignores too many Japanese indicators. Ones that do stand out just a bit are inflation, GDP, and Tenkan. Point number 2, it has the best reaction to US figures, the most straightforward one, less noise. Point number 3, moves alongside stocks. Dollar yen rises with the Nikkei and the S&P, falls with them. Not always, but that's a main characteristic. Dollar yen, the yen in general, prone to intervention, and it's also a safe haven currency, which means that sometimes the biggest movements in favor of the yen are in times of trouble, or against the yen is when we have the risk on atmosphere. Okay, so these are 5 points about the Japanese yen. Sorry again for the technical issues. I hope all of you are back, and or at least you can see the recording of this. Yeah, so that's it for the special segment for today. Let's reach the wrap-up for today. So this is the wrap-up for the live market open for June 1st. It's a Wednesday. The mood in market is mixed. We have Brexit polls tightening against the Remain camp, and this weighs on the British pound. Oil is not going anywhere fast around the OPEC meetings. Japan officially delays the sales tax by 2.5 years. This was no surprise, but we have a buy the rumor, sell the fact reaction. Figures yesterday were quite mixed. The ones that stand out are a miss on Canadian GDP. It weighs a bit on the Canadian dollar. No surprises from the Fed's favorite inflation figure, 1.6 year over year. Lower chances for a June rate hike, which already had low chances. Big news overnight: Australian GDP screamed higher, the best growth in 2.5 years, 1.1% quarter over quarter. Certainly helps the Australian and the New Zealand dollars, and no surprises from Japan. Let's talk about the charts in this wrap-up and then move to the event for today. So the euro is rising just a bit, but very much in range ahead of the ECB meeting tomorrow. 111.80, 112.50 are resistance lines. Support 110.70, maybe 111 before that. Pound dollar, the Brexit polls are weighing on it. 145 resistance followed by 145.80, and to the downside 144.40 and 143.70. Dollar yen, well, during the show it manages to climb back above the 110 level, but still significantly lower on the day. Fell off this line here at 110.50, which provided some support, and well, far off from 111.50. Next support 109.40 and 108.25. Dollar CAD flirting with this used to be a strong line of 130.80. High resistance 131.70 and support 130. Aussie dollar now sliding from the highs. Very nice technical behavior, tackling resistance at 73. 72.50 works as support. Further support 71.75. High resistance 73.75. And the Kiwi dollar higher within the range around 68. 68.40 is resistance. 66.70 is low support. Today it's manufacturing PMI day, where we are having these manufacturing PMIs now in the Eurozone. First disappointment from Spain, and we have a few more. And more importantly is the manufacturing PMI coming out of the UK alongside other figures. So it's expected to remain in contraction territory. It'll be a brief relief from the Brexit debate. Okay, so weak figure is expected over there. The manufacturing PMI from the United States is the most important one, especially as it serves as a hint for the non-farm payrolls on Friday. Here we're expecting to be on the positive side, 50, but also this reflects slow growth. Okay, we have the milk auction sometime in the US afternoon, in the European afternoon, US morning. Always has an impact on the Kiwi. Last time we had a rise. And at night, Australian retail sales and trade balance. But the Aussie still enjoys, of course, the GDP. Okay, so that's the wrap up for today. Sorry for the technical issues. Let's see if we have more questions before we head off. So yeah, thanks everybody for the patience and hanging on. Luca provides here charts. Kiwi channel top here. The good thing is one can short with tight risk. Okay, let's share it. Yeah, quite a nice channel on the Kiwi dollar. We're approaching resistance. Yeah, let's see if we can break higher. Maybe milk prices will provide the fuel, or will fall back down to range. Okay. Yeah, Fabian says it broke out of a steeper channel with more points of contact, so short also consistent with the retest. Yeah, the left retarget. That would have its target in the middle of your channel. Anyway, very nice channel here. Let's see if it's a break or a bounce on the Kiwi. Yeah, so thank you very much everybody for coming, and wish you all a safe and successful day in markets. Sorry for those technical issues. Usually we're okay on the technical side. And see you tomorrow. Tomorrow, of course, focus is on the ECB, European Central Bank, and we'll also have live coverage of that with Valeria and Mauricio. So, of course, we'll mention that also tomorrow. So thank you, everybody, and see you tomorrow. Bye-bye.